Hey guys, welcome to another webinar. It's quite late at this point in time, but I decided to want to wrap this up so we don't go into the week without actually doing any analysis. So if you're new here, welcome. And you guys have been here before, you know the drill. So what we do is we look at certain assets. Primarily now we're looking into indices, but we do have FX and we have some stocks literally there for you to look at. And the strategy we use is we use something called seasonality, we use COT, and we use probability. These are three independent tools, and we mix them together to form our strategy. So with this strategy, you don't get an opportunity every single day, but when you get an opportunity, you have a very decent amount, you know, amount percentage of success, basically. So from the last time we tested, I think it's about 80 something, 87 to 93%, right? That's what it was. But keep in mind, just a quick disclaimer, right? I'm not saying anything you're looking here you should carry out on your own personal account or do anything with. This is primarily for educational use only. This is me stating my own personal outlook into the market. So let's look at COT report. Now, before I start anything at all, I like to look at COT first. Because if I look at seasonality and seasonality looks good, but COT doesn't look good, probability doesn't look good, it's no use. If you look at COT is very quick. You can look at that in less than a minute. So if we click on COT right now, from the time it loads to now, boom, I already know what I need to do. Literally. I don't need to look at COT anymore. Literally. But if you're new here, what we look at is basically we look at the changes if they're adding more positions or they're taking away positions, or if they're adding more position to the long side or adding more position to the short side. So you look at the commercials and you look at the changes, right? Are they adding more position to the long or are they adding more position to the short side? Right now they're taking positions off both of them, so I don't need to touch this, right? I can now look further into other assets. So FX is there, but I'm not touching FX at the moment. Maybe we'll look at it later. But let's look at S&P 500. They're hiding position to the long and short side. I don't need that. Long means buy, short means sell. That's for guys that don't know. So this one only has 24 new position. It's not heavy enough. They're taking away 2,000 positions from here, but adding 24, excuse me, into this. And yeah, no. So we won't do that. And these guys, I don't think we have a seasonality for these ones. And that's not lying. So quite frankly, if I was just gonna trade these stocks listed on that COT, I've analyzed the market maybe less than 2 minutes, and there's nothing for me to go for in that is useful, right? We've looked at gold already. We've seen gold has nothing. Now, for the guys that do FX, for example, you can then look at your Australian dollars, see the adding position to both sides. You don't want that. So that's literally every pair of Aussie literally done like that. You don't need to analyze that anymore. And then from pounds, for example, you see they're selling short. Now you can do this quickly. Go here and then look at the seasonality. So guys, I've not seen seasonality before. This is what it looks like. It's the average price movement within the last 5, 15, and 45 years for this specific asset. So as we know that pounds is meant to go down, we know today's date is the 7th. So what we'll do is you go to the 7th of October, right around here, right? And you know that they're already selling. So you know that according to your seasonality, if all three aligns, it's only you want to only take this trade, right? When all three aligns. And it's right here on the 7th. 15 years is still saying long. So individual one. So you can turn on the 45, check it. On the 7th, is already saying go down. But we're not just looking at one. We want to look at three of them. Let me take the 45, 15, and 5 years. Now, this is telling me I'm better off on the 8. The 15 years is telling me I'm better off the 8. But both of them still align on the 8 as going down, right? Small, a little bit on the 45, but yeah. And then we go 5 years. 5 years also telling me on the 8. So what I'll look at is, next thing is I go to probability. And this is the only one that's going to take me slightly bit more time. So we'll find GBP right here. So look at every GBP pair. majors, minors, and all of that stuff. Now keep in mind, it's for educational purposes only. I'm not really truly, I don't really do the FX on the EAs because the EA is now active. You know, I'm adjusting it as it's going. What I tend to want to do is just keep indices because indices are more stable than FX. The percentage of indices is higher than FX. So what we're gonna do is go to October. I'll check the 7th of October. And we see it's telling us on the 7th of October, 54% chance to go long. So if you're buying, you have 54% chance. I don't want that. I prefer days that 3 days in my favor, right? So, but it's telling me on the 8th, I have a 54% chance going down, and after that, 61. Now, keep in mind, because we already knew this is short on the seasonal COT and also short on the seasonality telling us on the 8th. You're better off on this trade going on the 8th for entry, on the 8th for entry for sell. So GBP, CHF sell, but keep in mind, I like 3 days. And right here doesn't look like the 3rd day is live. So I would ideally skip that as a high risk trade. But if you guys want to take that, you can take that. As I said, I'm using EA to trade, so I wouldn't be touching any of the FX. So this one, for example, Euro GBP. Now keep in mind, GBP is going short, right? So we should be expecting this to go long. Same thing on the 8th. Now this looks better. I can go in on the 8th right here, and Euro GBP, you have that all the way to Thursday or Friday. You have a little bit of lag or kickback right here. So that's an asset for you if you wanted to go into that educational purposes, you know. But you can use that. FX more risky. Keep that in mind. Toba again. GBP JPY doesn't look good at all for this one, so we're not gonna even touch it. USD. GBP short this time expecting. Not gonna go for this one either. Good. Okay, I'm just gonna run through this because we've already opened it. Right. GBP Tuesday, more than medium risk. You still have to do your technical analysis, but yeah. Right, there you go. That one is high risk. Okay. And then shit. Right. So this one is saying Monday. So but it's better off than that. But personally, as I said, I'm just doing this because there was nothing aligned for indices. I wouldn't touch this personally for me because of the systems I'm using. But if you're still into FX, you can do that. I personally would prefer you go into indices mainly because of that more stability. So that's what I have for you guys for this week. For those that want to have access to this tool, I mean, there's so many assets here if you do FX that you can look into. The other ones for indices right here. So you got that right there. Some of those we can look at. Stock probabilities, go for stocks as well. These stocks right there. And then you still got seasonality for stocks as well. Yeah, you go, FedEx, Facebook, and all of that stuff. These are big, big plays in the market that you can have access to. So you can get access to them by going to the link in the description. You just have to go to business.demempire.co.uk, just at the top there, and then put pricing. Understand? And go there, and you should be able to get your membership. All right, guys. Catch you next week and stay safe. Godspeed and God bless you all. Take care.